Well, kind of getting back into it, we've learned quite a bit about the local market and some of the national trends. Uh, what would you, to kind of recap, what would you say, how can you paint a picture of the current investor market, conditions in the Louisville area today?
Mm-hmm. The current picture is investors keep your eyes on the southern aspects of Jefferson County. Be open to crossing the river because there's a wealth of opportunity. There's a boom of development out there. And then keep your mind for some more rural counties like Spencer County, Shelby County, and multifamily. If that's your direction, look at those pockets because there's definitely some margin and opportunity to gain some wealth.
Okay. And can you help us zoom out a little bit to give us more of a macro understanding of what's going on? Because there is a lot of information out there that's speaking to the national market, and we have viewers from all over. So shout out to California, shout out to Arizona, shout out to Texas, wherever you are. Yes, thank you for tuning in. And so can you help our members that are all over?
Absolutely. Speaking to the national level real estate market, we look at the big economic factors that impact the direction and decision making of our buyers and sellers. So obviously interest rates is up at the top, but interest rates are not the only impact to the decisions and the directions that people go. Now, interest rates right now are 6, 7, 6, 7. Am I allowed to do that? I've got an 8th grader. I can't get away from it, right? Yeah. In all seriousness, they really are. That is still a perspective of an elevated interest rate because it's very different than the rates that we've lived in for the past few years. And here's what we are led to know as truth. There's nothing that's suggesting that those rates are going to dip substantially. Meaning, if you are prepared to make an investment in real estate, the time to wait is not now. The cost of money is the cost of money if you're going down more of those traditional products. Now, separately in the conversation, we can talk about different investment strategies, especially for investors that get you out of that rate conversation in some capacity. That being said, rates are elevated and normalizing with a potential for a slow and slight shakedown as we go through the next business quarters. But barring anything outside of what we know today, there's no suggestion that there's going to be a dramatic shift down. So don't wait because of the rate.
Yet, aren't we below the trend line from a historical standpoint? There's perception and then there is the real number.
It depends on how far back you look, because if you include the late 80s and early 90s of interest rates pushing 17, 18%, then 6 and 7 is arguably below the trend line. However, if we start to look at the data that was recorded that into the 90s and moving forward, and some would argue that that's a pretty responsible look back, that market norm is right about 6. So we're kind of living in typical normal times right now. And I think that that's a healthy thing to think about because everybody wants to make sure that they're making a smart investment. No one wants to make a silly or destructive investment. And if it's around the rate, we can knock that domino over. We're good to go. We have a normal, typical, healthy interest rate. So the rates are there. The other things that we're looking at are inventory, days on market, home sales. So let's unpack those a little bit, if that's okay with you. So let's start with the cost of homes on the traditional market. Okay, they are still on the rise, but they're decelerating. We're now only about 7 or 8% above the 3 to 4% appreciation trend line. Here's what that means. Real estate, no matter the market, no matter the time, has historically appreciated 3 to 4% year over year, right? So if you're going to buy a piece of real estate, investment, or for your primary purposes, it's always a good time to buy unless you're thinking about selling in the next 6 or 12 months, right?
So that goes back to something you said is you know about the waiting, to buy real estate for the interest rates. If you feel they're a little high, you can wait for them to come down. Mm-hmm. I'd like to tell people, don't wait to buy real estate.
No.
Buy real estate and wait. Because time is your friend. The appreciation and what you're mentioning is you're probably getting to the appreciation factor and the tax deductions and then some of the cash flow if it's an investment property. But I didn't mean to interrupt. Just we're getting show notes and our producers like, you need to say that get in there. This is good stuff. This is good stuff. So
it's so true though, because we all are, myself included, we are so attracted to the shiny baubles and the get rich quicks. I mean, if you're not attracted to that, I wonder if you're a human being. But we have to be very discerning in that, especially in the investment world, because we can be sold an unrealistic bill, if you will, in this get rich quick scheme. If you're getting rich quick in a lot of real estate opportunities, I think that you need to exercise a lot of caution and you need to be very, very educated in your decision, because for the majority of us, it is buy it and wait. Don't wait to buy it. In other words, if you ask a lot of real estate investors when they wish they would have bought something, they would have said 20 years ago. And they would have also just wished that they would have never sold that first property, because every time we look back, the 3 to 4% appreciation trend line has always held to be true.
You know, what's really interesting about that is that in my personal history, I purchased a home, my wife and I purchased a home in what we would consider to be the best time in human history to purchase a home. Mm-hmm. And that was in 2010. Uh-huh. During the economic crisis. And then we purchased another home at the second best time that we felt like was the second best time in history, which was during the pandemic. Yep. And so when you really think about those things, yes, we were fortunate enough to take advantage of those patterns, right? So all that being aside, there is still opportunity